Next, Apple shares are set for a big swing. Google gets a big thumbs up, and make sure you're sitting down for our hot stocks. The options market is bracing for a big move with Apple when its shares report after the close today. Traders say that Apple could soar or tumble by as much as 7%. Now that means that stock could go as high as $535 or as low as $465 per share, and the shift is far more volatile than usual. In the previous 8 quarters, the average one-day earnings move has only been about 4%, according to riskreversal.com. In the meantime, there is no mercy for the tech giant, even on the day of Apple's earnings. This time, it's FBR wondering whether the company has enough juice to go the distance. Earlier, FBR reduced its price target for the already battered stock from $725 a share down to $675. Wall Street's median price target, $745. FBR says that it is worried about the possibility of iPhones and iPads being undercut by cheaper rivals. The bank is reducing its full-year profit outlook to an earnings per share of $54.24 from $55.67. It's a very different story for Google, though. 5 analysts are coming out with bullish calls on the company's stock after it posted strong results. Jefferies is the one with the biggest price target at $875 per share. Brokers are pointing to improvements in Google's improved cost per click ratio, which is how much advertisers spend to be on the top online search company. CPC declined 6% from a year earlier, but that's still a big improvement over a third quarter slide of 15%. Google is one of the biggest gainers on the NASDAQ. It's up 6% so far today. And speaking of which, it's time for Soaring and Sputtering. That's our look at market movers. Leading off is AMD. It sounds like it's right out of Bizarre World, but the S&P 500's biggest loser of 2012 is up and posting about a 10% increase after reporting a smaller than expected loss for the fourth quarter. Its results were helped out by higher priced desktop chips. The biggest loser of the day? So far that's Motorola Solutions, down about 1%. It had better than expected results, but said growth in its government business would slow down after the end of a key contract. Now before we go, I'm going to take on the big names battling for Dell in my tech take. Microsoft wants to get involved with private equity firm Silver Lake's attempted buy of Dell, but boss Steve Ballmer should take Microsoft and step away from the table. The PC market is already declining and smartphones are the way of the future. It really doesn't make sense for Ballmer to go buying into a declining business. Now this might sound crazy, but what Microsoft should do is behave a little bit more like Research in Motion. Why? Brim suggested that the company could license out its software to its one-time competitors. That's it for Techquity this Wednesday. Remember, you can follow us on Twitter at RTRSTechquity. I'm John Marino. This is Reuters.